Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is John Sandelman, CEO of Air Strategies, a vertically integrated multi-state operator in the U.S. cannabis sector, to discuss M&A activity in the space. John, it's great to have you with us. Welcome to Trade Talks.
Thank you for having me, Jill.
And John, why do you think after almost a year of no deal making in cannabis, M&A activity is poised to accelerate?
Okay, so let's go back 366 days ago and what was going on in the market and what caused the pause. Okay, so if we go back slightly over a year ago, market was super aggressive. The large MSOs were looking to do the land grab, which is what I refer to it. They were sticking their flags wherever a license was available and trying to create a large CPG company overnight. What happened? It was predictable in our world that if 5 large MSOs were trying to go into 16 states simultaneously, you would need 80 cultivators, 80 extractors, 80 managers to run your stores. 5 times 16 states. Well, we understood the market was so new, the industry is so new, that there just wasn't that talent pool. It wasn't deep enough. We thought it was quite shallow. So we took a different approach. We started small, 2 states, built up our businesses. We were EBITDA and cash flow positive day one. Our competitors started large, understood that it was impossible, again, for the talent reasons and the capital, and then contracted. And they understood that the access to capital had been closed in the last year, and that if they didn't stop the bleeding and create EBITDA and cash flow, they would be out of business. No M&A, no access to capital. People were focused on the consolidation. They had to improve their businesses, and we were following our strategy. Our strategy was observe what's going on in the market. I come from the markets. I understood that markets were cyclical. I understood this irrational behavior to do the land grab. And I paused because I started as a SPAC. I bought 5 initial companies, and then I stopped for a year, thinking the market would correct. The market has corrected. I'm sure you've observed that. Prices became more favorable. The problem is, in Cannabis 1.0, there was easy access to capital. In Cannabis 2.0, which is where we are today, as a result of the crash, okay, and the major correction, we also understand as market observers, Jill, you and I, that in the 2.0 of any industry, the market gets rationalized, okay? The investors start to figure out who the winners are and who won't survive. So what has gone on is this major correction, consolidation, generation now of cash flow and EBITDA, so it's completely rationalized. The only issue is capital is only being allocated to a handful of companies. So what the market is saying to itself is, for those companies we believe will be market leaders forward, those people that are going to be the dominant players, there is capital. That funnel is very, very tight. And that's why you haven't seen it, and that's why you're starting to see it, but not as big as we've seen it in 1.0. And the values are much greater, Jill, because the access to capital is so limited.
Right. So then, John, is Air in a position to make strategic acquisitions?
So Air's strategy was to further its footprint. We were, as I said to you, because I come from the finance world, I understood day one being EBITDA and cash flow positive was important. So during the correction, we were always cash flow positive and EBITDA positive. As I said to you, I waited because I had a view of the irrational behavior that was occurring in the market. Correction comes, price adjustment, limited access to capital by the players, better value proposition for the buyers. And so Air announced in its earnings call 2 weeks ago that we've just acquired an asset in Pennsylvania. What we also said in that call, Jill, is that by the end of the quarter, we'll have other acquisitions that we'll be able to announce.
Do you think cannabis could be one of the largest consumer businesses of our time?
As I said to you before the call, I actually was an investor in cannabis before I became the CEO of this company. And when I look at all the opportunities my family office gets to see, because we're fortunate, we get to see a lot, there was no place, Jill, that if I was willing to spend 100% of my time, that could be as large as this. So the way I think about it, I miss cable, I miss the internet. I wasn't one of the founders, I wasn't one of the CEOs, I wasn't one of the drivers. But when it comes to cannabis, I think we're looking at a very similar opportunity. And for myself and our team, there's nothing that we think provides a greater return than our time spent on this.
Well, John, of course, we have to discuss legalization, right? So advocates suggest it leads to revenue generation, job creation, certainly a benefit in an economy that's grappling with the COVID-19 slowdown, slowing down economic growth. We've seen job losses and so forth. So is AIR well positioned to capitalize off of that? Should we get some legalization that goes through, that we see some easing in legislation?
So funny enough, when I think about legalization, and I don't know when legalization will happen. I'm not here to predict anything because I'm actually not good at it. But I would like it not to occur for the next 6 to 12 months because there's still value out there. And I'm in the acquisition mode, as we just talked about it. Mm-hmm. So if you're in the acquisition mode, the last thing you want is the cost of capital and the access to capital to become unlimited, because then asset values will inflate. So for us, give me another 6 to 12 months. Let me hoover up what's out there. Let me build this great business that was EBITDA positive and cash flow positive to begin with, and will become one of the biggest EBITDA and cash flow positive companies in the industry. And then let the walls fall and let this become one of the greatest CPG industries ever to be created. The thing that gets me most excited about the industry, the plant is medicine for many. So there's a medicinal value, and then there's a recreational value. And there's very few industries, Jill, that I get to look at that meet two different consumer demands. And that's why I think it's really, really poised for extraordinary growth.
All right, John, great to have you with us on Trade Talks. Thanks so much for joining us.
Thanks for inviting me.
All right,
Bye-bye.
Thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.